we have a dual-pronged strategy, right? So first and foremost, we're a high-grade discovery story. We're looking to make additional discoveries and add to the high-grade zones that have previously been discovered, in particular at our flagship. We're looking to expand those zones. But secondly, we do act as a prospect generator. So we have our project portfolio. We look to bring in partner companies, use other people's money to advance these projects. And this is important because it allows us to pass the baton, if you will, and focus our time, money, and efforts at our flagship, at our best prospects, while other companies advance our other projects, and we get some cash in stock as well.
Hello everyone, this is Florian Munch. I'm here in Toronto at the PDAC in 2020. With me here today is Jordan Trimble, President and CEO of Skyharbour Resources, a uranium exploration and development company in the Athabasca Basin in Canada, the most prolific uranium region in the world. So it's a pleasure to meet you here.
Pleasure to be here.
Jordan.
Yeah, thanks for having me.
Would you be so kind giving just a wrap up about the company? Why you're working in the uranium space in the Athabasca?
Sure.
Maybe after that we will come to the uranium market.
Okay, great. Well, why don't I start from the beginning? So just a quick history on the company. So I started running Skyharbour about 6.5 years ago, and it was actually at about 7 years ago now at PDAC when we started acquiring projects. And really at the beginning, we saw an opportunity to go out there and start laying the foundation for the company, for our investors, to build up a new uranium company with a focus on the Athabasca Basin, which, as you pointed out, is the highest grade depository of uranium in the world. The market at that time, and to a certain extent still to this day, has been difficult. It's depressed uranium market post Fukushima.
I suppose this is why you got into it. Being a contrarian,
you've heard this 1,000 times over, but being a contrarian does pay off at the end of the day in this industry. And we saw a unique opportunity with uranium, and really what was a black swan event, unfortunate at Fukushima. It really crippled a lot of the companies, the valuations, and it brought asset prices down. So we went out there and started acquiring projects in the first few years, and we did a good job being opportunistic and building up a project portfolio in the Athabasca Basin. We've now acquired 6 projects at various stages of exploration, early stage development, and we have exposure to both the west and the east side of the Athabasca Basin. So the west side, where you've had recent notable discoveries like NextGen, Adaro, PLS, Fission's Deposit, Triple R, and a few others as well in more recent times. And then on the east side, where you've had most of the previous mining operations and
like MacArthur River and so on.
Yeah, MacArthur Cigar, the mills, the infrastructure. I mean, the east side is where you do have the infrastructure, power roads, mills, etc. So we've done a good job providing building up a project portfolio that offers exposure to both the west and the east side. We set out to do that, and we continue to look at opportunities. Again, the market is still tough, and that does continue to present opportunities. More recently, we have been acquiring more ground along strike, a $30 million earn-in option that Rio Tinto has on a project called Janus Lake. We've added quite a few hectares to our Yurchison project. But in addition to the contrarian opportunity that we saw specifically with uranium, what intrigued us with the basin when we started this, and again still very much to this day, is the discovery potential. What we were seeing happening and what we've seen happen over the last 10-12 years is we've seen some notable new discoveries, high-grade discoveries that have been made in new geological settings using some new techniques. And for me, that was really what drove us to put this together. My team, Rick and I, who's my head geologist, really drove us to put this all together in the early days, build the asset base, but then also go out there and advance them through some of these new techniques and methodologies that are being used, some new geophysical methods, some new ways of looking at the exploration in the rocks. And one of the big things, and you've probably heard this talked about with other basin, Athabasca Basin companies, where new discoveries have been made in the underlying basement rocks. So you have your overlying sandstone unconformed, and then
this was next gen, was it?
Yeah, next gen fission. You look at the Griffin Deposit, which is at Denison's Wheeler project. So you've had companies now have a lot of success by looking in these underlying basement rocks. And so at our flagship, for example, our Moore Lake project, which we're drilling on right now, this is one of the first drill programs that's been carried out on the project by us and by previous operators that's now almost entirely focused on basement hosted targets. And we've just started this program, 2,500 meters. So been 6.5, 7 years in the making. Again, as a uranium company, is one of the few remaining active uranium companies. We do offer investors exposure to this commodity. We do believe we're in the early days of a recovery. I think we have seen the corner turned late 2016 when we saw the uranium price bottom just below $18 a pound. And I think one last note too, and one of the highlights, if you will, of a uranium, being a uranium company. When you look at the landscape out there, when you look at other uranium companies,
it's getting thin, is it?
You look at the investable universe. The combined market capitalization now of all the publicly traded uranium companies is about $8 billion, right? And for investors, that's something to keep in mind, because when you see the price of the commodity of the metal move, which again we think is going to happen sooner than later, money capital that comes back into the sector has very few options. It doesn't have a whole bunch of ETFs. It doesn't have a whole bunch of companies that you can pick from. It works its way from the large caps
from Cameco tripling down
to the juniors quite quickly, which
Okay.
we see, for example, gold right now. We've had obviously a nice move in the price of gold. We've seen strong share performance from the large cap majors and working its way down into the mid tiers. But it seems like in the last 8-9 months there's been a lack of that capital. It hasn't yet flowed down to the juniors, creating a rising tide as we've seen in the past. And that's because there are a lot of companies out there. I think that eventually happens. But with the uranium space, given that it's contracted significantly, there's a lot less companies out there. That presents an exciting investment proposition when the market does turn.
Let's highlight the investment thesis behind all this, because we just talked about it before. There are different strategies to play the uranium market. You could hold the commodity itself via a vehicle. You could hold a company that has permitted ground and proven resources,
different types of mining companies.
Or you could do it like yourself and go for a new discovery. So what attracts you there? Yeah,
so as I pointed out, and one of the reasons when we put this together, one of the real driving forces for the vision of the company and our strategy was, we saw these new discoveries being made in the Athabasca Basin using some new technology and some new techniques, and that's exciting when you can go into a jurisdiction like the Athabasca Basin, which is really the Saudi Arabia, if you will, of uranium, and you can go in and you can make new discoveries in areas that maybe had some historical work and drilling, but for whatever reason they were unable to make that major discovery, and maybe we're on the 1 yard line. And so what we're doing and what we have been doing is we've been basically building a project base where we see that has all the right characteristics and indicators of there potentially being a large higher grade uranium deposit, and we're going out and we're using some of these new techniques. We're using some new methodologies in the field, looking at it through a bit of a different lens, and I think that we're going to be successful in doing that and making new discoveries in the basin. And you look at the recent discoveries, we talk about next gen and fission, and you look at Hathor, right, which was acquired by Rio Tinto for over 600 million in 2012 in a bidding war with Cameco. These companies, despite a tough uranium market, generated significant returns for investors, and that's another key talking point for our story is that, yes, we know it's been a tough uranium market. We do believe the price will rebound, but in the interim, you don't necessarily need a booming uranium price. You can still generate big returns for investors on the back of high-grade uranium discoveries in the Athabasca Basin. NextGen, which went from a $30 million valuation, it eclipsed $1 billion on the back of the Arrow discovery, and then you look at Fission at PLS, created significant returns for investors. Hathor, same thing, right? So we're out there looking to be that next big discovery story in the Athabasca Basin.
And what investors tend to forget is that the stuff is really valuable. It was in your presentation, you highlighted like the gold equivalent and so uranium equivalent.
For
what it's really
gold
worth.
investors that know what a good gold drill intercept looks like, or you have with uranium, 1% U3O8 is equivalent to about 20 grams per ton of gold, right? And about 1,400 grams per ton of silver. And so 1% is high grade. It's about 10 times the global average. But in the Athabasca Basin, you can get grades in excess of 20%, 30%. We had a drill hole on our flagship Moore project when we first took the project over, started drilling in 2017. It was a project that we acquired from our largest shareholder.
Moore is your flagship project right now.
Yeah. And we did a deal with Denison Mines, who's our largest shareholder and a strategic partner of ours. Dave Cates, who runs Denison Mines, on our board. We did the deal to acquire Moore Lake in 2017, and in the first drill program, we had one hole that intersected 21% U3O8 over 1.5 meters. We had some other good results, 6% over 6 meters. And so when you do the grade equivalents in gold, silver, copper, I mean, these are, this bonanza grade, it's pretty spectacular. So on a value per ton of rock, it's some of the most valuable rock out there. And again, that's why you can see, that's why it's exciting when you make these discoveries, because very quickly you can build a resource, and very quickly you can add value to the deposit.
Okay, I think US viewers now can really understand why the exploration potential is so high in the Athabasca, and why this model makes sense even in a depressed market. But let's talk about the general market, which is improving right now. What do you see for the uranium market? We've had a downturn over the last years. Investors had to be patient with uranium, but there's some things changing right now, like the long-term contracts and that. What are you seeing?
So if you go back to, we all know what happened in 2011. The price of uranium post-Fukushima tumbled from about $70 a pound all the way down to in late 2016 it got below $18 a pound, which again I think was the bottom, one of the lowest it's ever traded at in inflation adjusted terms, well below the cost of production, average global cost of production. Really at that price no one was making money when you factor in all-in costs anywhere in the world. And we have seen, we've over the last several years it's been somewhat volatile, but we have seen the trend reverse. We saw a period in 2017 where the price jumped back up into the mid to high 20s. For spot, yes, and it was important there to see the impact that had on the equities, because all of the stocks, the Skyharbours all the way up to the Camecos of the world, traded quite well during that period of time. And then we saw it trade more or less range bound between call it the low 20s to the high 20s. But again, when we see the price move up, you did see the company share prices move up, which is important. In the last year, it's been tough. There's been a lot of uncertainty in the market. There has been overhang, but we have seen major supply side response to the low price environment. It's important to note, even at the current, call it $24, $25 spot price, very, very few mines make money globally. And
but what's the trigger for higher prices?
I think it's a number of things, right? I mean, you talk about the biggest one is really new contracting, utility contracting. I mean, historically, that's where most material is traded. We know that a lot of existing contracts roll off over 50% by 2025, and you got to keep in mind too, there's fuel fabrication and enrichment, so you don't simply take yellowcake that's mined and plug it into a reactor. There's about a 1 to 2 year process to actually fabricate and make the fuel, and so you knock off a couple of years in if you want material that or you want enriched uranium that you can then use in a reactor. It does take time to actually make that. So new contracting, again, we look at the contracts that are rolling off. There's quite a lot. But we have had overhang in the market. We're seeing that because we now have a pretty significant primary mine supply deficit. You have about 182 million pounds in annual demand, and the primary mine supply has decreased from about 163 to 140.
But the deficit is coming because major players shut down part of their production.
Yes, that's been a part of it. There's been production and curtailment and shutdown. So obviously McArthur River being the big one, that's 15, 16 million pounds.
Kazatomprom 10% cut.
Kazatomprom's talked. Yeah, they've and then you look at a couple of other projects globally in Canada and Africa that have either shut down and or are coming to the end of their mine lives, and that's another important thing. If you look at globally right now, each year that passes, we're obviously consuming more uranium, but a lot of these mines that are multi-million pound a year producers, there's quite a large amount of production that 5, 6, 7 years out is these mines are coming to the end of their lives, and they're running out of ore, they're running out of reserves, and they will be shutting down. And you just simply do not have the development project, the pipeline projects out there right now that are getting the funding that they're going to need to come online to meet that the demand, which is continuing to grow as these other mines are going to come to the end of their mine lives, right? So the supply side, I think, is going to be the boon for the ultimate recovery and bull market. But as we know with commodities, a lot of times unless it's a supply shock, right? It's just the supply side working itself out, and we're seeing that right now in uranium. It does take some time for that to ultimately have a big impact in the market. So we started to see the major supply cuts back in 2017, starting with the Kazakhs, and then Cameco actually shut down some supply in 2015, 2016. Orano as well. Some of the major producers that exhibiting supply discipline, which is good. And I think we're now coming into in 2020, 2021. We're going to see the impact of those supply cuts, and we're going to see that represented in higher prices for the commodity. So the supply side, yes. Supply side response to this low price environment, we're going to see that come and be positive for the market, for the uranium price. But when we look at the demand side, and this is important, I think a lot of people lose sight of this, right? You look at globally right now, you have about just over 440 operable reactors. You have over 50 reactors under construction, and you have hundreds more in the pipeline, right? Order planned and proposed. A lot of these reactors are being built in places like China and India, parts of the world that need clean, affordable, baseload 24/7 electricity. I think over the next 5 to 10 years, you're going to see a sentiment for nuclear improve, and I think that's going to be ultimately be positive for demand. There's a couple of key things that we're keeping an eye out, and I think people need to watch. One is you look at the climate change protests over the last, in particular the last year. There is a lot of concern globally right now, and you've had in particular in the last several years some notable business leaders and environmentalists that have taken pro-nuclear stances.
I think even Bill Gates
is a good example, Michael Schellenberger, and so you're getting now more people doing the deep dive into the benefits of nuclear, and let's just take a case study here, Germany and France. France, right? And this is, and
I love that.
Well, I mean, it's, this is, the numbers, look, the numbers don't lie, right? And, now that we have the numbers from, what has been called a failed energy policy in Germany, you've had hundreds of billions of dollars invested into renewables, and which, look, that's great, but you need to see the results. Well, that's come at the cost of nuclear going offline. Well, what's happened as a result? So electricity costs now are almost twice that of, keep in mind, France is over 70% nuclear.
We're burning coal.
Burning more lignite coal. Emissions have gone up. I think on the stat on a per kilowatt of electricity generated, Germany is pollutes 10 times more. There's 10 times as much emissions per kilowatt of electricity generated than neighboring France right now. You have, obviously electricity costs have gone up, emissions per capita, but you've had a big sunk cost as well, and that's obviously not a good thing. And I think now you're seeing politicians in Germany, and you're seeing people in Germany finally go, this did not work out as we were hoping to. And it's a good case study because on the other side of the border, obviously it's France has maintained its position in nuclear, and there was a point where they were looking to decrease their reliance on nuclear, and they've now since reverted back to pushing that, kicking the can down the road, if you will.
If you take it on the global perspective, you can say the number of reactors is a fix or increasing number. So demand side is very strong.
Yeah, demand is continuing to grow, right? Even when you factor in plant closures, right? And it's important to note that a lot of these new reactors that are coming online in places like China, these are big Gen 3 reactors. They consume more uranium on an annual basis, and so you are seeing growth globally, and in particular in the developing world. Again, as I think as you see more people do their homework, do their research on pragmatic solutions to climate change, to improving air quality, nuclear is just the sentiment for nuclear will continue to improve.
It's part of the mixture.
Exactly. Yeah. And look, it really is, as I said earlier, it is the only source of baseload, clean, affordable, reliable electricity. I think people forget that. Wind, solar, hydro, the renewables, geothermal, these are intermittent sources of electricity. You need that baseload, clean source, and that's what nuclear provides. The other thing to look out for, these SMRs, so small modular reactors. This has been getting more media attention recently. So, we know that building a new reactor, especially in the Western world, permitting, licensing, the cost, right, the timeline, it's become a bit of a burden, needless to say, and that's why you've seen a lack of growth in the Western world. But small modular reactors, you're looking at anything from very small 5 megawatts all the way up to 200-300 megawatts. I think that these SMRs could be the way of the future in the Western world. In fact, more recently in Canada, you've seen an MOU signed between Ontario, New Brunswick, and Saskatchewan, between the provincial governments looking to advance and develop these SMRs, so I think as new SMR models and designs are commercialized over the coming years, that could significantly increase demand, especially in the Western world going forward.
Jordan, I don't want to interrupt you because I could talk with you about uranium for hours more, but I think viewers
want to talk about the projects.
Viewers got a really good overall view. Maybe some last words on Skyharbour Resources.
Yes,
to wrap it up.
Just before though, I will say, because I think this is important. So what we can talk about what are the catalysts this year. Again, new contracting is a big one. Cameco having to buy in the spot market, so they've just come out with recent financials where they have to acquire 22 million pounds to meet their delivery requirements from production shutdown at MacArthur and other mines that they have. They've explicitly stated that we've drawn down inventories well below our minimum threshold, and that we are going to have to buy the majority of that likely in the spot market, so that'll be bullish. And then last but not least, something to look out for, and this has gotten a lot of dominated headlines more recently, is Section 232 investigation and the subsequent nuclear fuel working group. That has, it's been created a lot of uncertainty around the sector. It's definitely created weakness in the equities and across the board, and we're seeing some resolution now to that with this new budget proposal. So having some resolution there, I think that helps incentivize utilities to come back into the market as they get clarity on where they have to buy material from. And keep in mind too, Canada does have with the US a joint action plan on strategic minerals, including uranium. So we'll see what role Canada can play. It's obviously going to be beneficial for US companies, but as the neighbor, and really the Athabasca Basin's really been the breadbasket of uranium for not just the US but other parts of the world as well. It's just north, and it's easy to ship it down to the US. So I think we'll see that that strong relationship between us and the States, and as a trade partner, I think we'll see that continue in the uranium space.
So Jordan, could you to finish it up really go a little bit deeper on the projects of Skyharbour Resources?
Okay, so as I mentioned, we've built up a project portfolio that has taken us several years to build up. We've been opportunistic, as I mentioned. We've taken advantage of depressed uranium market conditions. So 6 drill-ready projects. We have a couple of deposits, one of which is at our Falcon Point project, NI 43-101 inferred resource, and then our flagship project, Moore Lake. We have high-grade mineralization that we're drilling into right now, and again, as I mentioned earlier, looking for additional zones of high-grade in the basement rocks. I'll talk a little bit more about that, but just to give your subscribers and the audience a better idea of valuation. We've been able to acquire this asset base for about $4.5 million Canadian, and the projects have had over 90 million in historical exploration and work invested in the property. 90. And at one point, 2 of the projects were in a company in the last uranium bull market that was valued at over 300 million. So the re-rating potential with the current asset base is notable. And more specifically on the projects, we have a dual-pronged strategy, right? So first and foremost, we're a high-grade discovery story. We're looking to make additional discoveries and add to the high-grade zones that have previously been discovered, in particular at our flagship. We're looking to expand those zones. But secondly, we do act as a prospect generator. So we have our project portfolio. We look to bring in partner companies, use other people's money to advance these projects. And this is important because it allows us to pass the baton, if you will, and focus our time, money, and efforts at our flagship, at our best prospects, while other companies advance our other projects, and we get some cash in stock as well. So it allows us to fund our operations and our work at our flagship Moore Lake project. And so that's especially in this kind of a market, it's been a very effective strategy. We this year we're going to be receiving option payments from partners as well. So just to hone in on our flagship, again, I talked about this current 2,500 meter drill program, 7 and 9 drill holes underway, testing basement targets, looking for a much larger, higher grade deposit at depth in the same geological setting that you had NextGen and Fission and the Griffin Deposit near us at Wheeler. And so we're excited about it because it's, as I pointed out, as I mentioned earlier, we've been able to use some new geophysical techniques. We've flown geophysics using drones. It's obviously much cheaper, but it's allowed us to get better imaging over a fairly significant area at depth in the basement rocks. And very specifically, we have a conductive quarter, but we're looking for cross-cutting structures and features that allow for the fluids to come up and deposit more uranium. we have these targets, so we're now going to be drill testing them in this program. So look out for drill results over the next several months at our flagship. And then as a part of our prospect generator strategy, we have two other companies. Strategic partner in Orano, France's largest uranium mining company. They can earn up to 70% at our East Preston project over by NextGen and Fission by spending up to $8 million. They're going to be starting a field program here in the next few weeks. And some geophysics and some field work, and then they'll segue into that'll refine drill targets, which they'll look to drill later in the year. And then we have another partner company called Azincourt Energy that has to spend $3.5 million in exploration expenditures and some cash payments to earn up to again 70% of our East Preston project, and they've just commenced a 2,500 meter drill program. So between all of the partner companies and the work we're doing at our flagship, you have 5,000 meters of drilling. You have 3 programs that'll be exploration programs that'll be underway, generating news flow and upcoming near-term catalysts. And as we talked about before, one high-grade big drill hole in the Athabasca Basin is a significant event that changes the fortune of a small company like Skyharbour very quickly. And so I think between our program and our partner programs, we're in good shape with multiple irons in the fire to deliver that.
Amazing, Jordan. Not only a highly prospective exploration story, but a prospect generator in the uranium business. So
Absolutely.
Pleasure that you did the interview with me.
No, it was great.
Good luck.